Hi there, Kath Gammack, Rig Market Analyst with Westwood Global Energy, here with a quick recap on some of the offshore rig market news during the period 21st up to and including the 27th of March. The past week saw 2 new contracts for work off Brazil and 1 conditional letter of award for work off West Africa. Further to the RigLogix update of the 21st of January on the pending Buzios and Mero tender awards from Petrobras. For C, ultra-deepwater drillship Odin 1 has been awarded the contract for the Mero tender. The award covers 1,443 days and is expected to commence in early 2027. Following completion of the rig's current contract and certain preparatory activities. Total backlog is approximately $465 million, inclusive of mob fee. The agreement also includes an early termination option after 1,078 days. Additionally, the contract also has an unpriced option for 382 days. Constellation Oil Services has received a new contract from Petrobras for work off Brazil. The contract has an estimated duration of 1,042 days and estimated backlog of approximately $266 million. While the contract was signed this year, Constellation is unable to provide any additional details at this time due to confidentiality obligations. However, the contractor expects other agreements with the operator to be finalised in due course. And once the overall package is complete, Constellation will provide an update to the market. Of the 5 Constellation-owned rigs working for Petrobras, previously announced backlog for ultra-deepwater semi-sub Gold Star is due to finish this month, followed by ultra-deepwater drillship Brava Star in December this year. Ultra-deepwater semi-sub Alpha Star and ultra-deepwater drillship Laguna Star are firm into February and July 2028 respectively. And ultra-deepwater drillship Amarillina Star is committed into March of 2029. Constellation managed ultra-deepwater drillship Tidal Action and jackup Admarine 511 are both firm into the second half of 2028. Vantage Drilling has confirmed that it has a conditional letter of award in place for ultra-deepwater drillship Tungsten Explorer for further work in West Africa. The rig, which is currently drilling ahead offshore the Republic of Congo for Total Energies, will be committed under the new deal until the 3rd quarter of this year, with options available until the end of 2026. In light of the ongoing conflict in the Middle East, and in a press release, ADES confirmed that a handful of the group's offshore rigs in the GCC region have recently been subject to temporary suspensions due to the ongoing regional tensions. The company added that, based on the information currently available, the group believes these suspensions are short-term in nature. RigLogix has received information that at least 3 of ADES's jackups on hire with Saudi Aramco have been impacted, including High Island 5, High Island 9 and Harvey H. Ward, all of which are under long-term contract with the National Oil Company. Arabian Drilling also confirmed that it is in receipt of notifications for temporary suspension of some of its offshore rigs as a precautionary measure. The driller has not confirmed the number or names of the suspended assets. However, expects minimal financial impact in the first quarter of this year, with recovery anticipated as operations resume. Some of the other activities over the past week saw Odfjell drilling, ultra-deepwater semi-sub, Deep Sea Atlantic, leave Norwegian waters, and commence mobilisation to the UK Rosebank field, where she will undertake development drilling. The rig is firmly committed to Equinor until at least mid-2027, with options available thereafter, which, if exercised, could see the unit committed until late 2029. Jackup at WFD Rig 450 commenced operations with Arena Offshore in the Eugene Island Block 315 on the 23rd of March. WFD Rig 450 is drilling a development well in 231 feet of water. The rig had previously conducted P&A work for multiple wells in West Cameron Block 565 for White Fleet Operating on behalf of Shell. The rig is owned by White Fleet Drilling, which is affiliated with Arena and managed by Enterprise Offshore. Following on from our news item of the 25th of February, RigLogix has been advised that Valesto Energy Jackup Naga 6 is currently in the process of plugging and abandoning the Tapas Deep Exploration Well in Block PM515 off West Malaysia. The rig began working on the well in early March. Upon completion, the unit will be demobilised to the KSB shipyard and warm stacked. The rig is scheduled to arrive on or around the 28th of March. This will mark the end of a 2-year contract with Petronas Caragali that commenced in February of 2024. The owners are actively marketing the unit. Vantage Drilling advises that it expects ONGC to begin work with its ultra-deepwater drillship Platinum Explorer off India in early third quarter of 2026. As previously reported by RigLogix, the contractor has received a binding notification of award from ONGC for a 3-year firm programme with an additional 1-year option for work off India. The contract is required to begin within 180 days of issuance of the notification of award. And finally, Borr Drilling has entered into definitive agreements to acquire 5 premium jackups from Fontis Finance for a purchase price of $287 million. The acquisition will be completed through BC Ventures Limited, a newly established 50-50 joint venture between subsidiaries of Borr Drilling and its long-term well construction partner in Mexico. Under the transaction, the JV will acquire the rig-owning entities, which own 2 Frieden Goldman JU2000E design rigs and 3 Liturnio Super 116C design rigs. All 5 are currently located off Mexico. The transaction is expected to be financed through a $237 million non-recourse seller's credit, in addition to a cash contribution of $25 million from each of Borr Drilling and its local partner at closing. The seller's credit will have a 2.5-year maturity from the date of closing and will be secured by, among other things, a first lien on the 5 rigs. Borr notes the rigs are being acquired at a lower debt per rig and cash break-even level than its existing fleet. The company expects jack-up demand to increase, with these units positioning the company to capture future opportunities in Mexico and abroad. Subject to customary closing conditions, including merger control approvals, the transaction is expected to close in the third quarter of this year. That's it for this week. Many thanks for listening. Hope you find this of interest. If you'd like more information on RigLogix, please visit our website www.westwoodenergy.com.